Hello everyone, and welcome to this presentation on how to increase your trading odds in virtually every market. Welcome, my name is Stephen Primo. Thanks for attending today. And I'm going to, in this presentation, give you two great techniques that we have probably applied to about 3/4 to 90% of all of our trading methods. I'm going to teach you what those are today so you can start using these techniques to increase your odds for trading. You can apply them to any strategy that you currently have, or you can build a strategy based off of these. Welcome once again to this presentation. My name is Stephen Primo. I am the president and founder of Specialist Trading. And for those of you who are new to our webinars, we are first and foremost an educational company. We provide all of our students and all of our members strategies and techniques and ways in which to trade, things that I've accumulated in my 37 years of trading, which I first started on the floor of the Pacific Stock Exchange. But we're more about just generating signals and telling you what to buy and sell. We really don't want to do that. That goes against our philosophy. What we try to do at Specialist Trading is teach you how to trade. That's what we're in the business of, teaching traders how to trade, so that ultimately you don't have to even rely on us or any other source to make your trading decisions. We want you to be able to trade on your own. And that's why we bring you these educational webinars so you can use and apply the techniques that we share with you. Now, as always, before we begin, we ask that you please take a moment to view our disclaimer. I am going to show you a lot of performance results with these two techniques to increase your odds, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So as you're taking a moment to view our disclaimer, also I'd like to mention, for those of you once again who are new to my presentations, if you have any questions, kindly wait till the end of this webinar. It will only last about a half an hour or so, but the webinars seem to flow a lot better if we wait till the end to ask any question. I'll answer only one question right now, and that's probably the most popular question I get. Is this being recorded? Yes, it is. All of our webinars are recorded, so you can request a link to the recording. As you see there in your chat box, there is an email address as well as our phone number where you can request any of the recordings that we have as well. Okay, so if you have any questions, once again, if you just happen to join us, kindly write them down or remember them, and then just ask me in the last 10 to 15 minutes of today's webinar. And lastly, I want to invite each and every one of you to follow us on Twitter. That's our handle right there, at SPCLSTTRADG. We post a lot of great and free information. In fact, for all of you currency pair traders there, a couple of days ago, we posted some great long signals in the Swiss franc and the dollar yen. We told you that we had just gotten two signals to go long those. If you look at your charts and seen what they've done in the last 3 or 4 days, you'll know that all of our members who are privy to these signals that were generated by our strategies would have been able to take those long signals and would have had a very nice trade. We also just we generate trades not just in the currency pairs, but we also generate signals in the E-mini futures markets as well as stocks. So from time to time we will post and let you know what we were in or what we have just gotten out of. So please feel free to follow us on Twitter. Okay, so as I stated at the very beginning of this presentation, Specialist Trading is first and foremost an educational company. So why do we want to educate you? Well, it's been estimated that over 80, some people even say 90% of all traders will ultimately fail. In other words, they'll lose their nest egg. It doesn't mean that you'll go into some type of slump or drawdown. It really means that you'll lose everything you have saved for trading. And we never really want that to happen, because once you're out, you're out. I've been trading, like I said, for 37 years, and I've known a lot of traders who have hit home runs that have made hundreds of thousands, if not millions of dollars in a relatively short time, but I can venture to say that they've all lost it, because none of these traders who I knew who hit these big home runs are still trading. In fact, they're in totally different lines of work because they lost their nest egg. They lost everything. So it's our opinion that the reason why is because we don't have sound education. We're relying on outside sources or conventional wisdom to tell us what and how to trade. And if that's supposed to work so well, if that's the conventional wisdom that all these things we've been taught and read work so well, then why aren't we having better results with all of our traders? Why are the majority of traders losing everything? And I'm saying this from firsthand experience because I've made no secret about it. When I first started trading as a specialist on the floor of the stock exchange, I was getting killed myself. I was listening to all the things I was supposed to be doing and reading all the books, and I couldn't make a dime. It wasn't working. All the techniques, all the things I was supposed to do did not help me get any closer to success. So my mentors taught me that, Steve, the way you get to that realm of success is by stripping away this conventional wisdom, because it really has no consistency to it. From time to time, you'll hit some nice real, trades here with this conventional wisdom, but what we're looking for is consistency. So this is the edge that was taught to me, and once I started stripping away and letting go of all the stuff that I had been taught that was supposed to work, so-called conventional wisdom of trading, once I let go of that, then I started to become consistent, and thankfully it worked because I was able to stay on the floor for roughly another 10, 12 years. So this is what our goal is. Our goal is not to just simply force feed you and generate signals that our strategies post, but we're really trying to teach you how to trade with this edge so that ultimately you can spot these signals on your own that the strategies generate, and you won't have to rely on us. You're always going to be a member for life, and you can always email me with questions and always refer back to us, but you don't have to rely on us the way you would some other website where you have to continually subscribe to their newsletter or subscribe to their signal service or subscribe to their chat room. We don't believe in those things. It goes against our philosophy. So our goal is to teach you how to trade. Remember, not to trade for you, but to teach you how to trade with the specialist edge. Okay, so that's our philosophy behind the company. So let's talk about what you're going to learn today. And remember, once again, if you have any questions, we see some people are coming in right now. If you happen to join us just right now, please wait till the very end of today's webinar to ask any questions. There's a little question and answer box that I have to open up in order to see your questions, and I'm not even going to open it up till the very end of today's class. So I won't even see them if you happen to ask something. So just wait till the end, and I promise I'll get to each and every one of them. All right, let's begin the class today. What are you going to learn today? What are we going to teach you? Well, first of all, we're going to talk about conventional methods. We're going to talk about the so-called conventional methods that are supposed to work, things that you've been taught through time that this is the way you're supposed to be trading, and we're going to really show you how there really isn't any consistency to them. Remember, we're looking for consistency in our trading. We're not necessarily looking for home runs. Those will come time from time, but we're really looking to hit singles instead of home runs. So we'll share with you what our thoughts are on these conventional methods, and then we'll share with you 2 rules of one of our most consistent strategies. That's strategy number 4. And these are really, really important and consistent tools that you can actually apply to any strategy that you're currently trading, and we really feel confident that it will elevate your consistency level. Or if you want, you can build a strategy based upon these, but this is already a strategy that is probably one of our most popular and most consistent strategies that we have at Specialist Trading. It's strategy number 4. We're going to show you some current trade examples. We're going to show you how well this works. So right off the bat, I'm going to start off showing you conventional methods that are supposed to work, and I'm going to show you some older charts just for educational purposes. But when we show you the trade examples of what does work at the end of the presentation, we'll show you charts that are just maybe a couple of weeks old, anywhere from a month to a couple of weeks old, just to show you how well it works in current examples. And then we'll talk about a 2-for-1 attendee special. We'll get into that a little bit later. We'll show you how you can share with that and become a member of Specialist Trading for a really deep discounted price. All right, so let's start. Let's start out with conventional trading method number 1. Many of you may be using this already. This is double bottoms and double tops. Everyone has heard of this before. Oh, that the stock or the future just made a double top or double bottom. This is a great sign, and this is the way it's supposed to work. If we look at this older chart of Apple, we see here that a double bottom usually occurs in this scenario where you have some type of bottom that is established, a little bounce off that, and then another bottom. What a lot of people will refer to this as some type of support level, but conventional wisdom tells us that this is a great starting point for a bounce because we held for 2 times this type of support here. So now it's time for us to bounce higher. And so usually you'll see something like this, and this is what people have taught you in books. That people use this in seminars and educational webinars, and so a lot of people love to trade this way. This is a double bottom. The same thing will work reverse-wise if we look at an older chart of the E-mini, if we're talking about a double top. And the same concept applies. You just turn it upside down. We make some type of top, and then we go lower, and then hit that top again. And so this is now referred to as some type of double top, or another way we can refine it is by calling it some type of resistance. And conventional wisdom tells us that this is where you should be selling because we're most likely going to be having a difficult time getting through there, and this is what is supposed to happen. So this is a great technique. Let's say that you have been taught this or gone to a seminar, you look for patterns like this, and you're thinking, boy, this is easy. I can just look for these things all day long. And you can see this in intraday trading as well as daily bars or weekly bars. So let's say you try this with TGT. You look at all your chart books or online, you see, boy, this is a perfect example. Base number 1, then we make double bottom number 2. So you step in and buy, and then look what happens. Okay, does this look familiar to anyone? The minute you get into it, it doesn't work. It stops working. The reason why it stops working is because there's no consistency to it. All right? I'm not going to tell you that everything we have as specialist trading works 100% of the time, but we're not concerned with that. We're looking at things that have a 2-step forward, 1-step back approach. We're not going to sit here and tell you that everything works 100% of the time, but there's no consistency in these type of methods. The win-loss ratio, if you want to look at it that way, is really poor in using these patterns. How about conventional trading method number 2? Another way that people like to trade is by using Fibonacci retracements. Now, first of all, I want to say that I know a lot of traders that have done very well and are very successful trading Fibonacci retracements. The only trouble is it's extremely difficult. As a trader and as an educator, someone who has thousands of students, I like to make things as simple as possible for my students and make things very cut and dry. So in other words, when one student sees an example on a chart, the other student will come up with the same scenario. They'll come up with the same results. You're not going to get two students having different Fibonacci levels and Fibonacci retracement levels. So you see, that's the difficulty with Fibonacci. It's very subjective. There's too much discretion involved, and two traders will look at a chart and come up with two different scenarios. That's why we don't feel there's much consistency in trading Fibonacci. As I stated, there are many good traders who make a fine living trading this way. It's just extremely difficult. They fall into that 5 or 10% of all traders. Let's look at an example here, an older chart in UPS. As we see looking at this, we see that we've had some type of nice uptrend. So conventional wisdom using Fibonacci retracements tells us that what we want to do is wait for this uptrend to halt, and then we want to see some type of sell-off or pullback to some type of retracement. Now, a very common retracement is a 50% retracement. That means that if we started the rally here and went up higher, we're going to come back to a 50% level, or half the distance. So this is where you'd place a limit to buy. As we see in this example with UPS, the stock sold off and retraced down to the 50% retracement level and worked like a charm, right? So you'll see a lot of educators using examples like this. Conversely, if we have a downward move, as we see here in this daily chart of the euro-yen, we have a downward market. So what you want to see is the levels of where the downward movement started, and then once we bounce or rally, we want to sell when we get up to this 50% level. All right, this is what conventional Fibonacci retracement looks like. I know this is very standard, very basic, but we're just trying to share with you the basics of Fibonacci retracements. So this is where you would place your limit to go short at the 50% level, and lo and behold, it works like a charm, right? So this is enough to get you excited to start trading Fibonacci retracements. So your first trade up, you see in Tiffany here, it's in a clear-cut downtrend. So what you want to do is mark off your brackets, and once we get up to that 50%, we bounce up to this 50% level, you're going to short Tiffany. So it gets right up here, roughly to 84, 85 level, and you go short, and look what happens. Once again, Fibonacci retracement levels are very difficult to discern. Two traders can look at and see two different scenarios. One can say, well, that's just a pullback in an already established uptrend, where someone can say, no, that's a downtrend, and I'm looking for a 50% retracement. There's too much subjectivity involved in this type of trading. Remember, at specialist trading, we want things that are more clear-cut, cut and dry, so that two people looking at the same chart will come up with the same analysis. And you can't do that with these two different types of scenarios. All right, so if this webinar is called How to Increase Your Odds in Every Market, how are we going to increase our odds if we see that there's really no consistency in conventional methods? Remember, if there was, then everyone would be doing fantastic. Instead of 80 to 90% losers in the market, there would be 80 to 90% winners. So you know, the proof is in the pudding. These things don't have any consistency to them. So what does have consistency? Well, let me share with you the same things that were taught by my mentors when I was having an extremely difficult time trading on the floor of the exchange. First of all, these two techniques make up one of our most consistent strategies, which is strategy number 4. Let me share with you some of the highlights of this particular strategy. It's for virtually all traders. In other words, we have hedge fund managers that trade this particular strategy. We also have people that have only been trading for a couple of weeks. And I don't mean trading our strategy for a couple of weeks. I mean literally new to trading that just started trading 2 weeks ago. So it does not matter your experience level. It does not matter if you've been trading with hundreds of thousands of millions of dollars or if you've been trading with a $5,000 or $10,000 account. Everyone starts out with the same basic format, the same rules, okay? Now, who's it designed for? It's designed basically in its most standard format. It's for traders looking to catch quick momentum moves. So we're looking to get in and out fairly quickly. We're not going to be in too long. Anywhere from 2 to 5 bars is the standard. Now, if you're looking at a 5-minute chart, you're in and out in maybe 25 minutes. If you're looking at a monthly chart, you're in and out maybe 2 to 5 months. It all depends on the time frame you're looking at. Now, the beauty of this is, in our courses, we teach you ways in which to enhance the trading. So in other words, if you don't want to be in and out quickly, we teach you ways in which to stay in the market much longer, so you can squeeze out as much gain as you'd like. We also teach you ways to trade aggressively or conservatively, but that all comes within the course. Now, its intensity level from 1 to 3, with 1 being the most intense strategy you've ever traded, meaning that you have to be glued in front of your screen, in front of your computer, and 3 meaning the least, complicated, I'm sorry, what's the word I was looking for? Least complicated type of trading where you just virtually enter your order and walk away. Strategy number 4 is right in the middle. It's a very comfortable, very easy way to trade. You can stay in front of your computer if you like, you can walk away, but it's a very low intensity level, very moderate. It only uses one indicator, and guess what? I'm going to share with you what that is today, so that's one of the rules behind the strategy. The best thing is it transfers over onto any time frame, any direction, and any market. So in other words, if you're interested in becoming a member of the Strategy Number 4 course, and you trade multiple markets in different currency pairs or stocks, you don't have to buy a different package for each market you're trading because it transfers over into everyone. We have some strategies that only work really well in the Forex markets. We also have some other ones that only work well in stocks. But Strategy 4 works in everything. So you're basically getting 3 strategies for the price of 1 because you can trade it in 3 of the major markets, okay? Now, our edge here is consistency. Like I said earlier, I'm not going to sit here and promise you that every trade works out. We do have some small losers from time to time, and I think I'm going to show you some later on in this presentation. But it's all about consistency. Once again, we're not trying to promise you, the way some educators do, where they say, we made hundreds of thousands of % last year, or we plan on doing this month. We don't, say or get involved in that. We're an educational company. We're just trying to format the strategy to meet your needs, and all it has is a nice level of consistency to it. So that's what we're really trying to promote at Specialist Trading. We're trying to get you in charge of your own trading process. All right, so here are the 2 rules. These are the rules for buys. For those of you who have attended my presentations before, you've heard me talk about these, and it may sound like I'm reiterating a lot of the same stuff, but I'll show you how important this is. I use this on a daily basis. Rule number 1 states that price must be above the 50-period simple moving average. I've said this so many times, but I'll continue to say it. If there was one rule that I could only use for the remainder of my trading days, it would be that, meaning that where is price in relation to the 50-period simple moving average? If price is above, I only look for buy setups, okay? So in this particular scenario, if we're looking for buys, price must be above the 50-period simple moving average. And secondly, the setup bar must be a bar that closes in the top 25% or the top quarter of its range. So in other words, when we say the setup bar, we're talking about the bar that flashes the green light that says all systems go, it's time to enter into this trade. All right, now that bar must close in the top quarter of its range. And when we say range, if you are one of these traders that likes to look at candlesticks, I look at candlesticks every day. We're not looking at the open to close range. We're looking at the extreme range, the extreme high and the extreme low, the high of the wick and the low of the lower wick, okay? We never look at range as open to close. That's just the body from the open to close. The range, whenever anyone talks about range in its purest sense, we're talking about the high of the day and the low of the day, okay? So you want to just simply take the high of the day, the low of the day, divide by 4, and if we close in the top quarter of that, that's the 25%. That's what you're looking for. Now, I know some of you would say, that's it? This is too easy. This is roughly a third of the rules to strategy number 4, and these are probably the most basic and most important rules in the strategy, all right? So First of all, if we're looking at this generic chart, the overall trend is up. Why? Well, because we're above the 50-period simple moving average. If the overall trend is up, we are in no way, shape, way, or form whatsoever going to consider shorting. If we are above the 50-period, we're only looking for buy scenarios. And then once we know that we're above the 50, we're looking for bars that close in the top 25% of their range, okay? These are two really high important clues that the market has given you that most likely we're going to go higher. So this is a tremendous edge to give you that consistency and put the odds in your favor. So we find bars such as these right here that close in the top 25% of the range, and look what happened. Right off the bat, this went higher for the next 6 bars, but we also see that the second scenario went even higher. So you see the beauty of these two techniques here, these two edges. They're really giving you that consistency and putting the odds in your favor. Now, having said that, this isn't the entire strategy. There are some other rules that must be met. But you've just gotten the core of the rules of strategy number 4, and I'm going to show you how consistent this is. But let's talk about the sell side. It's basically the same thing. We're just going to turn everything upside down. So now price must be below the 50-period simple moving average. We are never going to look to buy anything if we are below the 50-period simple moving average. Once again, we're trying to put the odds in our favor, and if we put the odds in our favor, we don't try to pick bottoms if price is below the 50-period. The same concept appears if we are above the 50-period. We're not going to try and pick a top. We're going to go with the overall trend. So we want to see price below the 50-period, and then we want to see a setup bar that closes now in the bottom 25% of its range. So we're looking for a bar that closes in the bottom quarter. Same concept applies. We just simply take a bar, the extreme high and the extreme low. Doesn't matter if it's a 5-minute bar or a monthly bar, a weekly bar, or a daily bar. We divide it by 4 equal parts, and then we just look to see if we closed in that bottom quarter. Okay, so we are below the 50-period simple moving average. So this tells us that the overall trend is down. When we say overall, we're talking about roughly going back, if these are daily bars, going back anywhere from a month to 2 or 3 months. Okay? So the overall trend is down. Not the short term, but the overall trend is down. So this means we were not even consider going long. Now we look for a bar that closes in the bottom 25% of its range. These are two very extremely high techniques for putting the odds in your favor. Why? Because the market is giving you a clue. It wants to go lower. All right? So we look at that. We find the bar here, and look what happened. Okay? You see how the market will telegraph what it wants to do. You don't have to waste your time subscribing to some newsletter or some trading room or chat room. You don't have to waste your time waiting for news reports to come out. The market usually tells you in advance. I'm going to show you some examples of how it tells us in advance. These are some strategy number 4 examples that happened within the last couple of months or the last couple of days, actually. Let's start out with stocks, okay? Let's look at Apple. All right, this is a chart of Apple going up until yesterday. Where is price in relation to the 50-period simple moving average from Apple all the way starting around May? Price is above. So what does this tell us? The market is telling us, it's putting the odds in our favor that we're most likely going higher. So right off the bat, you know you're not going to short or even consider shorting Apple, regardless of what somebody says in a chat room, regardless of what some guy says on TV, regardless of what your strategy generates, you're not going to short Apple. We're only looking for buy setups in Apple, okay? If you look to go long Apple, you automatically put the odds in your favor. Second thing we're going to do is we're going to look for bars that close in the top 25%. Now we're looking at strategy 4 examples. I can't give you all the rules, I'm sorry, because we have members that have paid hundreds of dollars to purchase strategy number 4. But I will show you where the signals were generated. Going back all the way to the 9th of May, we see that these are all buy signals generated going long Apple. In fact, we had a signal that was generated on the 8th. That was just a couple of weeks ago, on Friday of a couple of weeks ago, to go long Apple. Wouldn't you have liked to take these signals that were generated by strategy number 4? These are all valid signals, and all of our members would have been privy to seeing these signals that were generated. How about PEG, P-E-G? All right. First thing we ask ourselves, where is price in relation to the 50-period simple moving average? price is below. So right off the bat, the odds are in our favor if we're only looking to go short. We have no business trying to pick a bottom and peg. If you had tried to use this as a double bottom right here, where we make a low and then another low, you would have gotten killed, as there's no consistency in that technique once again. And also, we're going against the 50-period simple moving average. If we are below, you only want to look for shorting signals. All right, so strategy number 4, look for a bar that closes in its bottom 25%, and on the 29th, it generated a sell signal roughly about 37 close, and you would have made roughly a good 3 or 4 points in the next week to the downside. You could have purchased options. If you're an option trader, you could have bought the puts, or you could have gone short the stock if you wanted to. Or even better, once you learn techniques like this, you can look at all your positions and say, boy, I shouldn't be in this. I should be exiting right now. I'm below the 50 period, or I'm above the 50 period. I shouldn't be short, things of that nature. How about CMG? All right, this is a perfect example of how the market tells you in advance, before news, before what someone says on TV, before any announcement, it tells you in advance what it's most likely going to do. Now, Chipotle, CMG, had a tremendous jump up in July. As you can see here, it was trading around 590, 600, and then it gapped up and went up roughly close to 100 points within the next couple of weeks. All right, someone would have said, boy, how would you have known that information was going to jump up like that? Well, first of all, we want the odds in our favor. So we ask ourselves, where is price in relation to the 50-period simple moving average? Right off the bat, we know that price is above, so there's no way we would have gotten caught shorting Chipotle. It doesn't matter if you got a sell signal, you're not going to take it. All right. Secondly, you want to look for strategy number 4 signals. And here was a signal generated on the 18th to go long Chipotle. So a day before that gap up, or 2 days before, strategy number 4 was already signaling that you should be going long. Remember, no one from Chipotle called us up from the corporate office and said, we're going to have a gap up of 80 to 100 points in the next couple of days. Why don't you tell all your students to get long? No one informed us. No one told us anything. We just looked at the market, and strategy number 4 automatically generated a buy signal. Coach, COH, where is price in relation to the 50? It's below the 50, so we're not even going to consider going long. You see, if you would have tried to go long anywhere around here thinking it had bottomed out on this double bottom, look what would have happened. So we don't even want to consider doing that. It's not worth it. I know from time to time students will tell me, boy, Steve, I saw a great buy signal. I didn't take it because it was below the 50 and it went straight up. I missed it because I followed your rule. Listen, we're talking about consistency. I know from time to time you will see some exceptions to the rule, but we're talking about someone who's going to be trading 10, 20, 30 years down the road. If you use this over time, you will be able to be in the game. Remember, it's about saving your capital so that you're not wiped out. It's just as easy to hit a home run as it is to lose it all. So we don't want to ever be in that scenario. We want to have this nice consistency. And the way to do that is by only shorting Coach here because we're below the 50. Now, if we look at all the strategy 4 signals that were generated, going back to the end of April, we had 4 great signals to go short using strategy number 4. Now let's look at the E-mini. The same thing will apply if you're trading intraday. Here is a 60-minute chart of the E-mini at the very end of July going into the first week of August. This is an hourly chart. Now, for all intents and purposes, we are below the 50-period simple moving average. So we don't in any way want to go long the E-mini. And it was a good thing we didn't, because we would have missed these nice sell signals that were all generated using strategy number 4. If you had just taken this very first one, which closed below the 50 period, you could have made a good 30 points within the next 3 days or so. Actually, more like 50 points, actually, if you'd ridden it all the way down and used our more aggressive ways of exiting the trade. How about a 10-minute chart? Well, here's a 10-minute chart going back to the 8th. Once again, this was just a couple of weeks ago. At around 8 o'clock Pacific time, we had consecutive closes above the 50. So this is telling us now that we should now only look to go long the E-mini on a 10-minute time frame. So we're looking for a bar that closed in the top 25% and that also met all of the other rules, 3 more rules in the strategy number 4 requirements. And that was right here. It was our buy signal, and would you have liked to have gone long roughly around 1913 or so and had a nice 10, 15 point gain in the next couple of hours. And how about a 5-minute chart? Okay, this was just a couple of weeks ago as well. We're below the 50-period simple moving average, so we're in no way going to consider going long the E-mini on a 5-minute time frame, and it's a good thing we didn't. All these sell signals were generated using strategy number 4. And the add-on, once you become a member of strategy number 4 course, the add-on that we furnish you with that comes with the course automatically generates these buy and sell arrows. Here's a 3,000 tick bar chart going even smaller time frame. This was on the 13th. This was just last week, just about a week ago. We are above the 50-period simple moving average, so we're only looking to go long. I know a lot of people would say, boy, Steve, we gapped up. We're going to have a really nice sell-off. We're probably going to come all the way down to fill that gap, because this is, once again, conventional wisdom. Conventional wisdom tells us that gaps are usually filled, and boy, we really kind of topped out here. This is kind of like an isolation island gap opening. We're probably going to come all the way down and reverse and go lower. We don't care about those things. There's no consistency. The only thing we ask ourselves is, first of all, where's price in relation to the 50 period? It's above. So as long as it's above, we're only looking for buy signals. And then the automatic signal generator generated 2 buy signals right here. So you could have taken these signals and had a very nice gain of about 5 or 7 points in the next couple of hours. And then lastly, the same concept, the same philosophy works in the Forex markets. For all you currency pair traders, here's a weekly chart of the British pound. As you can see, last October and November, we had consecutive closes above the 50. So this means on a weekly time frame, we're only going to be long or looking to go long the British pound. We're not going to even consider going short the British pound. And the strategy automatically generated buy signals going back to November 2013 all the way to April of 2014. And then on the daily chart, the euro-yen has been heading lower. It's safe to say we're only going to be going short. Why? Because we're below the 50. Now, I know a lot of people would say, boy, but Steve, look at these bounces. You could have made some really good money on the bounces here. Remember, that's a recipe for disaster, because that will work from time to time, but on the time it doesn't bounce, you give everything back. It's more conducive to being consistent if you just go with the overall trend, which in this case is telling you it's going lower, and so you just take these 3 strategy number 4 sell signals. You're going to sleep a lot better. You're going to have a lot more consistency in your trading. Why? Because you're in sync with the market and you're following these 2 techniques that have a high level of consistency. All right, so let's recap. We talked about conventional methods. The reason why they don't work is because, once again, there's no consistency in them. They will work from time to time, but when they stop working, if they're too subjective or they're too difficult to find out where these so-called levels or retracement levels or levels are, double tops and bottoms, then it gets very difficult to trade, and then you'll give everything back. We want consistency, so we share with you the 2 rules that are in our most consistent strategy, which is strategy number 4. All right? That rule number 1 is you have to ask yourselves where price is in relation to the 50-period simple moving average. If price is above, you will only look for buy signals. And I don't care if you're trading. Let's say you conclude this webinar and you say, you know what, it's not really my cup of tea, but I really don't show much interest in this kind of stuff. Well, you can still apply the 50-period simple moving average to whatever you're trading. In fact, I dare you to go back and look at your last 10 or 20 trades, and I can almost guarantee that the majority of your losers were because you were out of sync with the 50-period simple moving average. So if you take one thing from this presentation, use the 50-period in whatever method you decide to trade. And then we also share with you how when a bar closes in its top or bottom 25%, it's the market giving you a clue that it's most likely going to continue in that direction for the next 2 to 5 bars. So what a great clue, much better than some guy on TV or somebody talking in a trading room. The clue is coming from the market you're trading itself. So wouldn't you rather listen to the thing you're trading as opposed to an outside source? And we showed you how we put these 2 together to make one of our most consistent methods, which is strategy number 4. Now, remember, this presentation is how to increase your odds. And as I stated numerous times, we're not going to sit here and tell you that every trade works. We will have losses from time to time. All right? There are scenarios where you will get a perfect setup and it doesn't work. That's okay. We have money management and ways in which to protect ourselves. But how do we try to increase our odds even more? Well, I want to introduce to you a great tool we have. It's called the PET-D. There are many members, I see many members in this presentation already who have the PET-D course. I'm sure they probably love it because it really works well. It's a short-term trend identifier. All right? It's a proprietary tool that I was introduced to on the floor that I had to calculate by hand at the time because we didn't have programmers or high-speed computers then. But now, with the advent of those things, we can apply it to a color bar system. So what it does is it automatically colors the bar either green or red to show you that we're in a short-term uptrend or a short-term downtrend. All right, it's not a system, it's not a strategy. All it is a short-term trend identifier. But how can we use this to even elevate our odds for success even more? Well, if we want to apply it to strategy number 4, we look for that bar that closed in the top 25%. That's our setup bar. And so what we want to do is we want to see that it is being confirmed with the PET D. So in other words, if we get a buy signal, we want to make sure that the bar is colored green. All right, that's telling us that not only are we being told by strategy number 4 that we're going to be most likely going higher, but at the same time, the short-term trend identifier, the PET D, is also telling us that the short-term trend is up. So you have two things that are in your favor now. Now, if we get a sell signal using strategy number 4, now we want the signal bar, the bar that closed in the bottom 25%, to be colored red. Because not only do we have the high consistency rate level of strategy number 4, but we also have the confirmation from the PET D telling us that the short-term trend is down. So we have the overall trend and the short-term trend, as well as the rules of strategy number 4 working in our favor. So let's look at this chart of Amgen. All right, as you can see here, going into this last couple of weeks in August, we had 3 signals starting out in July, going till the end of August. Now, this one did not work out. This is a losing trade. You would have gotten in either this day if you were trading aggressively, or the next day on the opening, and you would have gotten stopped out. This trade worked out very nicely. And then the trade that happened just the first or second week of August worked out very nicely. So how could we have increased our odds? How could we have, at least try to filter out the losing trades if we could? Well, remember, if we get a buy signal, all 3 of these signals are buy signals, we need that setup bar to be colored green. So if we apply the PET D, we see that the colors now automatically change from red to green, and these 2 winning trades were green in color. The PET D automatically colored them green, giving you the confirmation to take the trade. But at the same time, we look at the first trade, guess what? It was colored red. So you would have the choice whether you wanted to take this trade or not. We're not going to say that it works 99.9% of the time. We don't have statistics. We're not a statistical company. But you've just put the odds in your favor. So it's your choice. Remember, we're making you a part of the process so you can decide. But what a great tool to decide and filter out which signals you want and don't want to take. How about HAS? We see here that we had 2 signals generated using strategy number 4. Okay? These are aggressive signals because even though they kind of bounce above and below the 50 period, if we close below, you can still generate a sell signal. Now, these are both sell signals, but this one would not have worked out. You would have entered on this day, and then look what happened. You most likely would have been stopped out. But the second signal worked. So how could we have filtered out the bad signal and only gotten into the good one? Well, we apply the PET D. And remember, if we're going short, we want to see the PET D color the setup bar red now. All right? So we see here that this one that worked out really nicely was colored red. So we would have taken this. And the first one that was a losing trade was colored green. So you had the option not to take this if you did not want to. How about the industrials? Okay, you can use this as a filter to tell you what the market is going to be doing. If we look back, all the way back to May or June, I should say, coming into June and then July and all the way in the first week of August, we had a total of 4 signals generated in the Dow Jones Industrial Average. All right, so this is a great tool to use strategy number 4, telling you if the market's going to rally. Well, you can look to find other things to buy. Say you're interested in other stocks, or say you're interested in options. These are great indicators telling you that the market is most likely going to go in that direction. So we had 4 great buy signals. The first 3 worked out tremendously, and they were all colored green. So they were all giving you the option to go into this trade that the market was most likely going to go up. Now, at the very end of July, we had 1 more buy signal, but guess what? It was not colored green. It was colored red. So at this point, if you were trading this, if you were basing your decisions on the market, you would have said, you know what, most likely the market is not going to bounce here. Or if I'm long, maybe I can, tighten up my stops, or maybe I can at least stay out of the market until the dust has settled. So you would not have taken this signal, and look what happened. We had this really large sell-off coming into the first week of August, all because the PET D was telling you the short-term trend is down, not up. Now, long-term, it works just as well. Now, we say this is a short-term trend identifier, but if you want to apply it to monthly charts, look at this monthly chart of the S&P index going all the way back 20 years to 1994. Look at all the peaks and valleys we had here coming up to the bubble that burst in 2000, roughly, when we had the internet bubble burst, coming all the way back down, then rallying again, and then the banking crisis, financial bubble bursting, and then to what we're currently doing now, going straight up again. Wouldn't it be nice to know when you should be long and when you should be out and then when you should be long again? Well, we simply apply the PET-D to these monthly charts of the S&P index, and look at this. The majority of the bars are green, and once you get 2 or 3 consecutive bars of the other color, that's telling you time to switch, that the market is going to most likely switch its trend. And you could have done this going back 20 years. Look how well this has worked. And right now, you're currently still in the market because all the bars are still green. So do you see how well this tool works? Along with the consistency of strategy number 4, applying the PET-D will really increase your odds for success in trading any market. So as we conclude here, before we go to questions, I want to invite each and every one of you to participate in this special 2-for-1 attendee special. This is where we're combining strategy number 4, our most consistent strategy, with the PET-D. This is a great combo. We've had tremendous success. Our personnel as well as our students and members have had great success trading this combo. And normally, this would cost you together, if you put these together, it would cost you close to $2,000. We're dropping it 25% for all the attendees down to $1,495. And if that is still too much for you to come in one lump sum, we have payment plans available. So you can call up and contact one of our trading consultants, and you can have both of these up and running today, as soon as today, once you put together some type of payment plan. That's the beauty of what we want to do. We want to work with you and make sure that you have this level of success. So if you're interested in becoming a member of the Strategy Number 4 course, which I showed you examples today, which comes with those 2 rules we talked about, also with the PET-D, we've discounted it roughly 25% down to $1,495 for a limited time only. But please remember, you can also get payments, a payment plan structure with this. So you don't have to worry about coming up with $1,495 altogether. If you're interested in coming on board, here's the information. You can go to our sister site, which is Pro Trader Strategies. They market and promote all of my individual courses and studies, and you can contact any one of the trading consultants at trading@protraderstrategies.com, or you can simply call them directly at area code 310-598-6677. Now I'm going to answer your questions right now, and I'll leave that right up there. Remember, if you want, you can call, or you can see there in your chat box, there is the number and the email address as well on your chat box to the right. I'm going to answer any questions you may have had. Excuse me as I open up the box and try to get these in order. Hemeth, our number 1 student from India, is the first one to ask a question. Hello, Hemeth. He, I believe, has the PET-D and the Strategy Number 4 course. He says, he says it's not the 50-period simple moving average line. It's a money saver line, because for myself, so many times it will help to produce my profit. Strategy number 4. Any advanced method is there to find well in advance to go 300% level, and very soon I will purchase all those strategies. Once again, many thanks to you. Thank you, Hemeth. He is a student of ours in India, and he's had tremendous success trading strategy number 4 and the PET-D along with all the rules in the Indian markets. Now, we've never studied or researched the Indian markets, so it's just here to tell you how well this transposes onto any market in any time frame. We don't know of any Indian stocks. We're not familiar with them, but Hemeth has had a great success trading them. And he's got more than success. He has consistency in his trading now. So I'm happy for him. And he is one to attest for that 50%, or I should say that 50-period simple moving average. He calls it a money saver line, because it really does. From time to time, you will see scenarios where you'll say to yourself, boy, I followed this and I lost out on a good trade. But remember, we're trying to instill consistency in you, because consistency is it's what's going to help you trade for 30, 40 years down the road. And so if you continue to use this 50-period simple moving average, you will get that consistency in your trading. So he's the first one to attest how well it works for him. Thank you, Hemeth, and I wish you continued success. Martin asked, how do you get the archived version of the webinars? I looked on the site but couldn't find them. They are on the site, Mr. Martin, but I would suggest contacting the Pro Trader Strategies consultants or your personalized consultant, the one that helped you purchase the whatever strategy you have, and they can direct you exactly where to go to get the archive. That's another thing that's included with our courses. Excuse me, we have archived videos and webinars that I record privately for our members that will also give you more tips and techniques in which to enhance your trading. So if you want to trade more aggressively, if you want to trade more conservatively, there are a lot of great techniques included in the archived videos. So this is an online course, but at the same time, you also have my personal email address. You can access me whenever you'd like and ask me any questions. So there's a lot of great free information, plus I'm your personal mentor or tutor to walk with you hand in hand and to share with your trading ideas. Okay, so this is really a tutorial course. Let me see here. Go to the next question. David asked, what does the PET-D stand for? That's a good question, Dave. The PET-D stands for the Primo Early Trend Detector, because as I stated, it is not a system, it's not a strategy, it's simply a short-term trend identifier. It's a trend detector, but it works extremely well. It's very fine-tuned for that short term, and that's why when we discovered how well it works with strategy number 4, we saw that we were getting even higher levels of consistency when we put the two together. Because strategy number 4 is basically a strategy built off of pattern recognition that is looking for specific rules to be met within a pattern, and I shared with you 2 of those rules. But then we're just simply going off that and off of the overall trend. What the PET-D does is it also detects the very short-term trend. And it's a proprietary tool where we can't give away the rules because there's just there's too much riding on it. We've had extremely high success rate with it, and we want to just kind of keep it proprietary for right now. But all we can tell you is that it's based off of momentum. And this is something I was taught on the floor of the exchange. I had to calculate it by hand every day, and I could only use it for daily bars. But as I stated, with high-speed computers and with algorithms and with programmers, we were able to format it into a color bar code. So now all you need to know is if the bar is green, it's telling you that the short-term trend is most likely up. If the bar is red, the short-term trend is down. So it's a great, great way to confirm signals. Now, you can also use it on a strategy that you currently use. Let's say you have a strategy that you love and that you like it and that you're doing well with it, it's working okay. Well, you could have the PET-D just confirm those signals as well. So it does not matter that it doesn't just work with strategy 4. Let's say you only make your trading decisions based off of the news. Well, once the news comes out, you want to see what the PET-D is saying. If the PET-D is telling you that it's green, well, then I guess it's an okay to buy. But if you want to buy based off the news and the PET-D is telling you that the current bar is red, I would most likely not take that trade. So it's a great trend identifier, but you can also use it as a confirming tool, okay? Don is asking 25% of what? Show it, please. Well, Don, we don't have a presentation, but it's extremely simple. Here's what it is, Don. When you look at a bar, okay, just take any bar, okay? It doesn't matter if it's a daily bar, a weekly bar, a monthly bar. You want to see the very high of the range. Let's say the high of the range is 104, okay? And let's say the low of that bar is 100, okay? So the range of the bar is 4 points, okay? You simply divide that range into 4 separate but equal divisions. So the first quarter would be 101. The second, or 50%, would be 102. 75% would be 103, and the last quarter would be from 103 to 104, 104 being the high of the range. So you want to see it close in that top 25% of the range. The range is the extreme high of the bar and the extreme low of the bar. We're not concerned with open or close. So when we say top 25%, we're saying the top 25% of its range. In fact, when you're saying the top 25% of what, we said it many times, the top 25% of its range. So we're looking at the range, meaning the extreme high, extreme low, and you just simply divide it by 4 equal parts. The top quarter is where you want to see it close if you're looking for buy signals. The bottom quarter is where you want to see it close if you're looking for sell signals. It's that simple. It's not complicated at all. Now, once you get that bar, then you want to apply the PET-D. If that's your signal bar telling you that it's okay to get in the market, that all the rules have been met to either go long or short, now you just apply the PET-D, and the PET-D has to confirm it. So in other words, if we're closing in the top 25%, the rules tell us that most likely we're going to be going higher. We're going to continue in that upward direction. But we want to confirm it with a short-term trend identifier. So that bar must be colored green by the PET D. That's it. It's really simple. If we're closing in the bottom 25%, the rules are telling us that most likely we're going to continue lower because the market has given us a clue it wants to go lower. But we want to confirm that with the PET D. Therefore, the PET D should color that bar red. Okay? Very simple. It's not complicated at all. Hemant has another suggestion. He says, hello, sir. The PET D is a simple and very easy tool. It's working very good. It will help us very early to find good momentum sometimes. Yes, that's what it's really one of the great things about it, Hemant. It tells you in advance. That's why it's called the Primo early trend detector, because many times it tells you in advance when a trend is about to change, because the short-term trend will always precede the longer or overall trend. Okay? Jonathan asks, do you avoid trading through major announcements or events? This is a great question, Jonathan. Personally, I don't care about announcements or events. Remember, once again, when I was trading on the floor, I used to, listen to all this stuff. I used to know all about announcements. I know about jobless claims, all about earnings reports, economic news, and I couldn't make a dime. All right, even when I avoided them, I couldn't make a dime. So the point is, there's no use even concerning yourself with them, in my opinion. Now, we have a number of traders. None of our strategies are based off of them. We don't even look at news. But we have a number of traders who just have been instilled thinking that that's so important that you have to look at that. So I always tell people, listen, if you get a signal, but it's right around a news announcement, and you're too frightened to pull the trigger, then don't pull it. There's no rule that says you have to take every trade. This is not a system. We do not keep percentage win-loss ratios. We do not keep numbers or worst-case scenarios going back 5 years in our strategies, because they're strategies, they're not systems. Everyone can trade them differently if they like, so there's no way you can keep a record of that. You can trade them aggressively. We teach you how to trade aggressively. We teach you how to trade conservatively. Hemant was saying if you want to stay in longer, you can stay in longer, and we teach you how to do that. But someone can say, no, I want to get in and out and just use the basic format. Well, you can do that too. There's a number of ways in which to trade it, so we're not a systematical company. We don't keep track of all that. So therefore, we give you that discretion where you can say, you know what, I'm not going to trade around news events because I don't feel comfortable. That's fine. You don't have to. There's going to be another setup very soon somewhere else. So it's up to you. If you're asking me personally if I trade around there, I don't care. I don't even look at that. I trade just, when I'm available to trade. I don't concern myself with news, with announcements. It makes no difference to me. Usually the market is telling you the right side to be on already by using that 50-period simple moving average, and the clue is in where the bar closes, in the top or 25% of its range or the bottom. So I listen to the market. I don't listen to outside sources. That's what lost me money when I was trading on the floor. I listened to the news. We didn't have trading rooms or chat rooms then, but we had newsletters. And I subscribed to every newsletter available. I was watching TV and listening to what all these guys were saying, and nothing worked for me. So if these were all supposed to help me, why weren't they helping? So it wasn't until I just let go of these things. It takes courage, but you have to ultimately let go. I started to become consistent. I've been trading for nearly 40 years now. So I think if I continued to trade that way, I would have ultimately failed. So it's up to you. If you really feel comfortable that way, that's fine. You don't have to trade around. We don't say that it's required, okay? Let's see here. Savinch Dervish is saying, Steve, since I stopped using Fibonacci levels, resistance and support levels, etc., and with the use of the PET D in Strategy 4, which I purchased, my trading improved greatly. Well, thank you very much. That's fantastic, Savinch. This is another student of ours. And see, this is what we're trying to instill in you. We're not going to sit here and tell you that if you become a member of the course, you are going to be making hundreds of thousands of dollars a month. We don't say that. We're just trying to get you consistent, because I know how frustrating that is. I know how depressing that can be to work like crazy and to read all the books and to study and have nothing to show for it, and nothing works. Or maybe you'll get a nice streak of winning trades, and then all of a sudden you lost everything by the end of the month. It's extremely depressing and it's frustrating. So we want you just to be able to get on track so that you at least feel comfortable trading and you know that you're on the right track. And that's what Dervish is telling us right here. So we're glad that you did, Dervish. Remember, we're not trying to put down or say that anyone else's methods are terrible and they don't work. We're just saying that they're very complicated and they're too subjective. So why not just stick to things that are very simple and have worked and have stood the test of time. And that's all we're trying to promote. And our prices are very moderate. If you look at a lot of people and their prices, they're extremely expensive. You're getting 37 years of experience in trading and a mentor for a lifetime with the small prices that we have here. So this is what you're getting for our courses. Andre asks, hi Steve, yes, do you use the RSI? Yes, we use it as mainly we use it for an exiting tool. That's what we use it, but it's just one of our techniques we use for an exit. But not really, we don't use it for a lot of other things. We mainly look at pattern recognition. That's where a lot of because remember I stated, we like to listen to what the market's telling us, and the easiest way to find out what the market is telling you is through patterns. So that's what we look, and I don't mean very complicated patterns, trust me. I'm not going to sit here and tell you that, okay, it's very difficult, this has to be met, and this and this. Most of our strategies only have like 4 or 5 rules, and they're very simple patterns. They're very easy. They're nothing that you have to look at and say, boy, I don't see it. How does Steve see these things? It's not like that. After 2 to 3 weeks, you'll be able to spot these signals on your own, okay? Let's see here. Let's see some more questions. Can the PET-D be compatible or comparable with trading platform or track and trade Gecko software? Okay, Joseph. Oh, I see. Compatible. I can say the PET-D is compatible with, and strategy 4, as with all of our strategies and techniques, is compatible with TradeStation. It's compatible with NinjaTrader, MT4, and Metastock. So if you have those 4 major charting software platforms, you can apply all of our strategies. Now, if you have Thinkorswim, there are ways to get around it where you can get a free NinjaTrader because with Thinkorswim it requires you to have, I believe, Ameritrade, and then you can, with Ameritrade, you can get a free NinjaTrader platform, and then you can use that to see all of our signals on. But I'm not really sure with Gecko. You may want to contact the trading consultants, and they may be able to set you up with that, okay? Jonathan says, are you not concerned about support and resistance levels? No, Jonathan, I covered that at the very beginning of the presentation. Support, one man's support is another man's resistance, okay? They're too subjective. I have not found any consistency in it. Once again, I know there are traders that make very good livings trading support and resistance, but it's not cut and dry. You will get 2 traders that will look at a chart, and one trader will tell you this is where the support is. Another trader will tell you, no, this is where the support is. At specialist trading, we want things that are going to be the same. When 2 traders look at the same chart, they're going to come up with the same answer. In other words, where is price in relation to the 50-period simple moving average? You can't, one trader can't say, well, it's above, and the other trader can't say it's below. If you're looking at the same chart, you're both going to come up with the same answers because we're not subjective in that realm. It's not discretionary that way. So Fibonacci as well as support and resistance are, in my opinion, way too subjective. And that's why the majority of traders don't do well with that. There are some traders that do very well, but it's very hard to teach. So I try to teach things that are extremely, extremely simple. And as you saw in today's presentation, it couldn't get any more simpler than the 2 techniques I shared with you today. It's extremely simple. So this is what I try to teach you. And for all intents and purposes, if you become a member of our Strategy Number 4 course, I pretty much taught you the most difficult part of the strategy so far. So it's extremely simple, okay? Don Carlson asks price. Don't know if that's a statement or a question, Don. If you're asking about the price of the 2-for-1 combo, it's $14.95. But remember, we will give you any type of payment plan. So if you want to have a payment plan, you can structure that and pay on a monthly basis. But you'll be up and running by this afternoon if you'd like. Okay, if that's what you're asking. If you're stating price in terms of how you define a signal, well, yeah, that's mainly what we look at. We look at price. Jonathan asks again, will it be effective to use the PET-D with other indicators like stochastics, MACD, or we don't need any other indicators? Personally, I would say maybe with just maybe one, Jonathan. Another one of the bits of philosophy of specialist trading is we don't want to overcomplicate our trading. It's the easiest thing in the world to overcomplicate your trading. It's the most difficult thing in the world to simplify it. And that's what we try to do. Remember, I told you my mentors taught me to simplify everything, and that's when I started to become consistent. So therefore, that's what I teach all my students. Keep your trading as simple as possible. Don't overcomplicate it because that's what's keeping you from your success. So Sure, if you want to use it with one other indicator, I would say that's okay, but don't put a ton of indicators and have them. That's what I used to do. Remember I said at the very beginning of this presentation, I used to look at 20, 30 indicators, and I still couldn't make a dime. It's because we overcomplicate things. If you look at traders who have been trading for maybe 5 to 10 years, a relatively short time, their trading plans are extremely complicated. Tons of indicators and convoluted logic, ways in which to generate signals. But if you look at guys who've been trading like myself for 30, 40 years, they have the most simple trading plans. They have, the strategies have maybe 3 to 5 rules, and that's it, because that's what works. So don't overcomplicate your trading. You can use the PET D with any other strategy you have, but try to keep it simple, okay? David asks, does the PET D work on e-signal? David, I think it does, but once again, just because the Pro Trader Strategy, our sister site, handles that, I would contact them to ask, just to make sure. But I'm pretty sure it does work with eSignal as well. Andre asks, does the PET D work on every trading platform? Kind of the same question. I know basically the 4 main ones it works on are, once again, NinjaTrader, MT4, TradeStation, and Metastock. As well, it works on Thinkorswim, but you have to kind of get the NinjaTrader platform through Ameritrade and Thinkorswim. But it still does work, so we have people who can apply it that way. Don asks, will this work on Renko bars, rain bars? Yes, in fact, we've had someone who has emailed recently that says it works fantastic. They're probably the best week they've had using this on Renko bars this past week. So I personally don't use Renko bars. I don't trade with them, but I know a lot of people that are students of ours do, and they've had tremendous success. So yes, this will work on Renko bars, okay? Okay, looks like we're just about coming to the end of our hour here. As we conclude, I just want to say, if you really want to get that consistency in your trading, remember, we want to put the odds in our favor. We're not going to sit here and tell you that every trade works. We're not like some other educators telling you that, you're going to become a millionaire after the end of the month. No, we're trying to get you consistent. That's all we're trying to do. And I think you can tell in our presentations how honorable we are about that. And our students will say the same thing. We're trying to teach you how to trade. And we've presented you with some great free information so that you can use as early as tomorrow if you'd like. You can use these 2 things and not even become a member of Specialist Trading. We're showing you in good faith. We're trying to educate you. But if you want to get the full package of the PET D along with the strategy number 4, I strongly urge you to take advantage of that, because it's for a limited time only. We've had a number of people have had success with this. You can contact and speak to any one of the trading consultants, and they'll give you some testimonials of the other students and members. And as you saw here, 2 of our members already said how well our trading has got them on that road to consistency. So if you're really thinking about taking your trading to the next level, I urge you to take advantage of that great special we have, and you can get a payment plan as well, so you don't have to come up with the full price. Remember, contact any one of our trading consultants by simply just emailing them at the email address below. That's trading@protraderstrategies.com. Or you can call us directly, area code 310-598-6677. And you'll see it on your chat box as well. As we conclude, I want to thank you so much for taking time out of your Thursday and to come and join us in this presentation. Thank you so much for listening to the presentation. I hope the information we gave you for free will help you, and I look forward to all of you becoming members and students of mine at Specialist Trading. Thank you so much. We'll see you next time. Bye-bye.